I'm Charlotte McLeod with investingnews.com, and here today with me is Frank Holmes, CEO and CIO at US Global Investors. Thank you so much for being here. Great to have you as always.
No, it's wonderful to be with you, Charlotte.
Always really good to be catching up with you, and we've made it to almost the end of 2025. So I want to spend time today looking back at the year that we've had, and of course, forward to 2026. And I thought we could begin with gold. If we look back to our last conversation all the way back in July, you were telling us that gold would get to 4,000 per ounce in 2025, which of course it did. So I have to ask right off the bat, what are you expecting for the gold price next year?
Well, next year it will most likely test 5,000, and by the end of Trump's term, I think it'll be 7,000, and I think that silver will be over $100.
I think those are some big numbers, but they're starting to feel more attainable. And as we know for gold, there are so many factors that are behind the price right now. So I'm wondering what you would pull out as the most important elements for investors to keep an eye on for gold in 2026.
Well, it's been this century that gold has outperformed the S&P 500 by a really decent margin, even though it's dominated now today with 7 magnificent technology companies because of the breakthrough in AI. But really, if you look at overall, what's taken place this century has been the rapid use of MMT, modern monetary theory. And I was looking at a chart yesterday, was saying that it's now 30 years that gold has outperformed the S&P 500, and still it is deeply underweighted. At one time, it got up to 8% and went down to less than 2%, and it's still hovering only about 2% of Americans own gold in a diversified portfolio, which is just crazy. When you have the largest and most successful hedge fund, Ray Dalio, having a 10 to 15% weighting in gold, and then gold stocks on top of that. In his success this century, a lot has been having a good portion of those assets in gold-related investments. And I think that that's really an important wake-up call. So people say, oh, it's over now, it's had a big move. Well, it'll have a correction, but it trades higher because MMT is not going away. And for your listeners, this modern monetary theory basically says that you use printing of money faster than what the economy is growing, could be 2-3 times faster, and that will ignite the economy. And then when the economy gets strong again, you take back that short-term paper fiat money you put into the system, and that's where it falls apart. There is a lack of discipline, of a real commitment with politics to pull back the reins on that money. And it doesn't matter if you're in a democracy or a dictatorship in China, it's all a race to zero with fiat money. And it just becomes wiser to have this asset allocation into gold and gold stocks.
I think that people are definitely starting to realize the value of gold right now. And so, as you mentioned, we're set to go higher in 2026. Right now, we are still historically high when it comes to gold, but we're in a little bit of a holding pattern at the moment. I think people can see all of the drivers that are behind gold, and they wonder what will kick off the next leg higher, the next move that we see in gold. So any thoughts that you would share on that note?
But it's now the big money printing was before for many of these sort of feel-good, idealistic social welfare programs. And now you're stuck with a lot of those commitments. But you're seeing this pushback, like would be a classic would be Rubio in the U.S. lamenting about 45 years ago, Cuban as escaping Cuba on a rubber raft and styrofoam, getting to Miami and working so hard. But now their retirement, they're getting $1,000 a month, and young new refugees are getting $1,500 a month and flying back and forth. That's sort of where your tax dollars are going for these social welfare programs like that. They're going to change. And where you're going to see the big spend is going to be military. We saw Trump warn Europe and Canada, NATO, that America was going to pull out unless they all start carrying their fair share, which is 2% of GDP, is into national security. Cybersecurity is included with that. Data centers end up being included with that. And so when you see that spend, it was incredible reflex that happened out of Europe that it went over 2%. And you saw military stocks in Germany go up 100%. You saw military stocks in the UK. And so NATO ETF is a classic example in the UK. Every time there's some negative news of Russia and Ukraine, $50 million are going to that ETF. And it only increased with Trump making those statements. So now the push is 5%. So what is happening in Canada under new Prime Minister Carney is having a minister of AI and having a minister, the Minister of Defense is also alumni of Goldman Sachs, just like Prime Minister Carney is. And he was also in the military. So he has appreciation for the importance of defense. You're seeing that the political leadership is now changing at the top end of decision making and where capital will go. And I think you'll see a bigger spend of the debt funding, in particular for military spending. So this means that currencies are going to be racing down to zero. Some will happen faster than others. And you can look at this century, there are several that went from 100 to 90 to only 5 cents and 2 cents on the dollar, whereas it's taken other countries like America 120 years to do that. And it's important to recognize that race. The overall calm way to invest is gold, and make sure you have this allocation. And this is a wonderful time of the year, Charlotte, when I've always recommended buy silver coins, give them away as happy Hanukkah gifts, Christmas gifts, especially to your children and grandchildren, because they don't flip them out. You give them a gaming technology or anything else, it's gone. It's forgotten about, but they keep their silver coin and remember that their parents and grandparents gave them this, and they start stacking and holding on to these coins, and they're going to eventually become quite important. And we're seeing that now with pennies. The last creation of pennies in America is just took place. There'll be no more pennies being made. Since COVID, there's been a shortage of pennies and nickels and dimes and quarters as people start hoarding these coins, because eventually they're going to go away. But if paper money becomes worthless, those coins go up in value. So you are seeing a slow change, but it's not mainstream. It's not going to be in the Globe and Mail or the Wall Street Journal yet.
Well, I think that's a nice transition. I always like the silver coin gift idea. I think that's a great one, especially as you said, for kids. And we can transition over to talking about silver, because always good to have gold in mind. Our audience is very interested in gold. But what's really attracting attention right now among investors, I think, is silver, because the price has really been on the move the last week and a half or so, nearly getting to the $60 level, which I think quite recently sounded out of reach. So what are the factors you see kicking off this latest rise in silver?
Well, I think it's a big part of the whole solar alternative source of energy and solar panels, and the demand for silver in its ability to be a transformative part of renewable energy. And I don't think that is going to go away. I don't think you need ESG and DEI requirements, which were really key. It's interesting that Europe, Canada, and the US were pushing all this agenda, but the Chinese weren't. And they just continued to plow through building mines. And what used to be, when I first got in the business in 1978, when I first went in the investment world, that it took 7 years from the day of a discovery till you got an ounce of gold out of the ground. And now it's 30 years. But in China, in Africa, and other places where they operate, it's 5 to 7 years. They basically have been able to dominate the control of especially strategic minerals that tie into technology. But they're the biggest gold producer and the biggest buyer of gold in the open market. And that's also to legitimize their currency to try to catch up to what America is relative. America has the largest holdings of gold. And so it would take a huge amount of 100% of all gold supply every year for the next decade for them to catch up, which they're not going to buy 100% of. But I think you're going to continue to buy that. So we are witnessing geopolitics, sources of energy, currency devaluation, and a shift of money printing towards national defenses. And I think that that's really an interesting phenomenon that I see in the sort of global environment that we live in today.
I think we can definitely see how the strong case for silver is developing alongside gold. And I want to take a look at the gold and silver mining stocks as well, because investors had to wait a little while for the companies to start catching up with the metals prices. Now it seems like that is starting to happen. We're also getting some generalist interest in the gold and silver stocks. But as we're heading into next year, I think people are wondering, where should they focus when it comes to the gold and silver stocks? Where is the potential now?
Well, Charlotte, coming back on the idea of gold and silver, I was a year ago, and I was commenting to one of the biggest gold bullion dealers in silver coins. They sell them, and they were just shocked that the premium of silver, spot silver, was so much lower to get delivery. So it was hard to actually get any size in silver, and the premium for spot silver was way over the futures price, and so therefore they believed it was all going to fall. And I had a thesis that no, it's telling you it's going to trade higher. And the same thing was with gold, that premium trades higher. I think that that's what you want to be looking at on a regular basis. Not that the premium is going to go away, because the scarcity element, the supply of new silver mines coming on stream, new gold mines coming on stream, is very, very, very difficult and challenging, and capital expensive. So with that, the value of delivery of silver, cash, silver coins, gold coins, get them, buy them now. I think they trade higher because that premium is not going to evaporate. It's going to be more of a sentiment predictive that higher prices. And I think it's really important that people grasp that concept. Now, that transfers over into gold and silver stocks, and gold and silver stocks move 2 to 3 times the daily price movement of gold and silver prices. So if gold goes up 1%, the gold stocks go up 2%, silver goes up 1%, silver stocks go up 3%. Silver falls 1%, silver stocks fall 3%. So silver has got a higher beta, a higher daily volatility, and a 10-day volatility, the silver stocks to silver prices, and gold is basically 2% to the price of gold. And I think that we're going to continue to see that interest in those silver stocks and the gold stocks is really going to come from the growth momentum players. And you can see in this past year, starting about 6 months ago, it happened also back in 2005. Where gold stocks start showing up in Investors Business Daily. And Investors Business Daily has a huge momentum stock buyers following. And they're agnostic to the business. You can be in healthcare, you can be in AI, and you can be in gold or silver stocks. They are looking for this revenue momentum Q over Q and year over year. And they are looking for cash flow and earnings quarter over quarter and year over year. So this past year, many of those stocks, the gold stocks started showing up 6 months ago, better than the overall stock market in growth in revenue and cash flow per share. So voila, an IBD's Big 50s holdings is showing up gold stocks. And then we started showing up the royalty stock names. And then they would fade in and fade out, and you would have Ken Ross coming in, going out. That it's more of the bigger cap gold stock names, but Newmont didn't show up. And Newmont is the biggest beast of them all. Why did Newmont not show up in IBD? Well, it's because it didn't have revenue momentum and cash flow momentum relative to the other universal stocks that are looking for the strongest growth in revenue and cash flow. But I believe that we're going to witness even further growth over the next year and couple of years, where gold stocks are always going to be in this IBD because the scarcity element of how so hard and timelines for getting new silver and gold. Those that have the deposits will be able to demonstrate this momentum growth in revenue relative to the S&P 500. So if the S&P 500 is growing at, say, 5% in revenue, and gold stocks are growing at 12 and 15% in revenue, the momentum investors start going into gold stocks. So I think if you're bullish on gold and silver, then the real big leverage gain is gold and silver stocks.
And that would be, would you say to focus then more on those big producers that are likely to be getting that generalist interest, or can investors move down the chain?
I think you want to move down the chain, and the mid caps can show new mines coming on stream and growth, that they're the ones that will give you that big momentum. And I think that Panama Cobra asset comes back on stream, the copper gold porphyry deposit that got shut down. Well, that's a huge impact to Franco-Nevada. And that will just torque its revenue. So it's looking for that event, opening that mine again. All of a sudden, who would be the biggest beneficiary right away would be Franco. They don't have to worry about all the costs and setting it up. It's just all they get the royalty off that production, that stream. So I think that those companies show up. A new one that came out just before COVID was called Triple Flag. And now it's got substance and size, and it's showing up in IBD. And it's a growth stock. Royal Gold was a growth stock until they made the acquisition, and that major acquisition all of a sudden diluted the revenue per share growth and cash flow per share growth. So it drops out of showing up in IBD. But Wheaton Precious shows up in IBD. Kinross shows up in IBD. Eldorado, Kinross's. They're the names that people are going to at this stage. Cisco would show up. What will happen down the road is another sea change is happening from the crypto space. And what's happening in the crypto space, who's becoming the 800-pound gorilla, is Tether. And Tether has the biggest stable coin in the world, and it's basically a money market fund that they keep the interest, so therefore it's not a security, it's a blockchain asset, but it's outside of the US and it's outside of the EU, and it now has over 500 million customers. And you're talking about roughly $4,000 a customer, and that's remarkable type of numbers of just under $200 billion in assets of US dollars. They own more US dollars than Germany. They are one of the biggest buyers of US government bonds every auction. They started pivoting with the thought process of gold prices going down and real interest rates going negative. Gold is a super performer. So they started small with a Tether stable coin. Can't buy in the US or Canada, can't buy this in Europe, but the rest of the world is a big buyer in Latin America, Eastern Europe, all through Africa, the Middle East, Indonesia, these places. They would have big buyers of the stable coin and become a big buyers of their stable gold stable coin. And they are showing up as being one of the most biggest buyers every week. So as money goes into that stable coin, they're big buyers of gold. They bought a safety deposit box they basically built into the mountains in Switzerland. And they're continuously buying. Now they've got into a new gold stock where they put $150 million of their gold stablecoin into it. So we're talking about them owning 50 tons of gold and growing. And they made last year, it'll drop this year because rates are falling, but they did make $13 billion with 175 workers, computer scientists basically out of Lugano. And I think that they are a game changer in alternative assets in buying actually the most profitable company in revenue and earnings per share per employee in the world. They're making this big significant bet on gold. Guess what, Charlotte? They're showing up and owning more than 5% of a lot of this mid-cap, small-cap royalty companies. They love the royalty names.
I'm so glad you mentioned Tether, because I find it so fascinating, and you did a great job explaining for people who might not be familiar with what's going on. So thank you for going into that topic. And it leads into, I wanted to spend at least a little bit of time looking at Bitcoin with you, because like gold and silver, it was at all-time highs earlier this year. And unlike gold and silver, it's now going in a different direction. We see the Bitcoin price heading downward. So I'm wondering what you see coming in 2026. Do we see a Bitcoin price recovery? What factors are you going to be watching next year?
Well, I think copper, there's no doubt that copper is taking on a new industrial element. And silver was for, in particular, solar panels. And we needed that source of renewable energy. And you need silicone and you need silver. So the Chinese dominate that and for their own economy, and also exporting and selling these solar panels around the world. I don't think that that's going away. It's going to be becoming more and more difficult to get renewable sources of energy, maybe geothermal. The cost differential will make a big difference. But looking at copper, copper is becoming a strategic mineral. And that's because of the huge military spending I talked about earlier. And the NATO spending going into, when they want to have autonomous cars, they use a lot more copper. Tesla uses a lot more copper in their car than a Ford pickup truck. And is recognizing the batteries, lithium is also now all of a sudden the strategic mineral. And we're going to see that there's the protectionism of copper. Well, what China has done with this one belt, one road concept, which is the beginning I was very bullish on. I thought it was a brilliant idea until Xi Jinping showed that he's a dictator, and this really is a Trojan horse to get his tentacles into 140 of the 194 countries in the UN have borrowed from it over $1 trillion. They bought 100 ports, and they want to control these deposits. So the idea of even Ivanhoe at the beginning was the big capital came in with Robert Friedland's deal was the Chinese. And it was for them to have access to that copper. The same thing in Chile, the same thing in Peru, and you need this copper for the wiring, and you need it for all the wiring, in particular for the data centers and for cable, every type of form of cable for its conductivity. Well, if China shuts down or prevents you from being able to get strategic minerals, which they've been doing, and what happens with copper. So copper deposits in Canada are going to become more valuable. The big problem in Canada is regulations have taken it from 7 years to 30 years. And they've basically taken away property rights and turned them over to Indian reservations are controlling a lot of these property rights. And that's created just another dimension of complexity of how do you turn around and build these operations. Whereas you do not have that problem in Africa to the degree, and you have a different risk in Africa, which is radical Islamic jihads, etc., in places like Mali, etc. So that's a different risk than in Canada. But when we're in Canada and we're in the US, we're going to see policy changes, and we're going to see fast tracking of these projects because China would like to be able to shut down your access to copper. Well, that really slows down the ability for data centers. Well, why are data centers important? No data centers, no Netflix. no mobile apps. Just forget it all. You need data centers. And now we have what's this AI industrial boom. You need even more data centers. And Canada, with this huge surplus of hydroelectricity, has created so many barriers to entry with no data centers, without all this government regulations, etc. You just look at NVIDIA chip sales as a percentage of capita, and their 50% is US. So you have over 1,000 HPC, high performance computing data centers in America. Well, they need a lot of air conditioning. You get air conditioning, you need a lot of copper. Copper. You're doing all the military, all the big spend on security. Copper. And then you're going to have tungsten, titanium. So it's really interesting to see the shift on the value of the periodic table. What becomes overvalued and undervalued on that periodic table. There is no free lunch. And that's what you have to recognize. And the government MMT is now shifting from social welfare programs of every form, and it's now shifting to security. And that security spend are data centers. It's not just for you and I to be able to use OpenChat or Perplexity or Grok, which I love Grok. No, it's that makes it easy. It is for autonomous vehicles. It's for autonomous robotics. It's for autonomous military equipment. It's for AI to protect against threats from the KGB of China. Is called MSS. And they've been involved in massive hacks into the telecoms of North America and all the power stations in North America. They're called typhoons. Volt is one, Volt Typhoon. You can look it up on Google or OpenChat and learn more about it. But we are dealing with this. And I'm more sensitive to this, Charlotte, because I live in San Antonio, and San Antonio's military USA. And we have 3 Air Force bases, Army base. We have the second largest NSA operations. We have the #1 cybersecurity university in the country. So I get lots of sort of that local information and flow of where things are going that are not mainstream Bloomberg.
You can really start to see how all these things connect and how maybe investors can translate these into opportunities for 2026. I know I have to start letting you go, but I've got a couple of fun questions before I do. If we look forward to next year, what would your pick be for top performing asset? It can be a commodity, but it doesn't have to be.
No, I think the commodities are going to continue to do well. I think that the Bitcoin data centers are deeply undervalued relative to a data center which doesn't do Bitcoin. So Bitcoin's volatile, like gold is volatile, and that attracts a different investor. But what you are seeing with data centers, they trade at 10 to 15 times revenue per share, not 2 times, not 3 times, but 10 to 15. And they trade at 20 to 25 times EBITDA. I mean, if gold stocks traded at 25 times EBITDA, the gold stocks would triple from here. Triple. So it's just recognizing that. So now where the cheapest way to play this energy is Bitcoin miners, because Bitcoin miners, like Hive, they went and sourced what we call surplus or stranded electricity. And we went into those places and we built substations and we built transformers and bought them and hooked them up. And the process for converting what they call a tier 1 Bitcoin mining data center to tier 3 is much, much faster than saying, we have to build from scratch a tier 3. That timeline is 3 to 5 years. But if you already have a tier 1 data center, it can be 9 months. So the value is really the Bitcoin data centers that are going into the hyperscalers are looking to partner and do deals with. So I don't think that data center cash flow multiples come down. I think that the Bitcoin data centers that are doing what Hive is dual. It is both tier 3 and tier 1 and was the first to do tier 1. Now we're scaling it substantially in Canada, along with what we've done in Paraguay. But Paraguay gives us this blue sky for tier 3. So simplicity. You spend the money in tier 1, you get your capital back quickly within 18 months, and then you start to plan for tier 3. And tier 3 is then buying these NVIDIA chips, but then you need much more air conditioning because you're building a brain. And so I think the cheapest asset class are Bitcoin data centers that really have great assets to convert. They have the power, they have the land, and the hyperscalers like Microsoft, Amazon will cut deals with them or try to take them out. That's where that's where I think is the big mean reversion next year in that technology overlay. When it comes to the metals, I think that copper is making new highs, but I think that copper has much more upside. I think that copper supply, not only difficulty from the mines, is more challenging. We're going to see it become a strategic weapon by the Chinese. And we're going to see the interest by what we've seen now this past year under President Trump is taking investments. They've been making investments in mineral companies. They've been making investments in Australian and Canadian companies who are in the exploration for strategic minerals. And I think the same thing's going to evolve more readily in copper and some of the other elements like tungsten. We know lithium so well, but there's other elements on the periodic table. So we are in a secular bull market for resources, Charlotte. We're a secular bull market, and we are not overbought because people are underinvested. And I say this because if you look at ETFs, of all the ETFs in America, what percentage are in the GDX, GDXJ, GoAU is our ETF, using Smart Beta 2.0 to pick gold stocks. If you look at that percentage of all ETFs, it's less than 2%. It was at 8%. The smartest money in the game are 10 to 15%. So I believe there'll be this thing, mean reversion it's called, that more and more investors will all of a sudden start going into gold, copper, these various stocks. Money will flow into ETFs and it'll become 10% of the overall all ETFs. And I've seen this cycle before. I'm 70 years old, and God bless me that I could go run 3 kilometers this morning. And with that 70 means I've seen many cycles. And those cycles give you an idea that there's still such reluctant in this space. And what's going to happen next year is the small caps and the mid caps are going to improve, and they're going to get more bids coming into them. And it's been sort of slow and disappointing to see, but I think we have to have is a change in the regulatory oversight in Canada to streamline it and make it easier from environmental to build a mine, to explore, to develop a mine. All these things have to get streamlined using AI and using AI to streamline the regulations. That would really help price discovery. The junior gold stocks, any of these stocks lack price discovery. And a lot of that burden comes from the regulatory regime of giving citations that on all the press releases that happen. We hear from the 50 junior gold stocks we own, people lament about it. And you need price discovery to raise capital. And you need to have this sort of overall element that's so positive. So I think that it will happen. And we're going to see under Prime Minister in Canada, Carney, who's from Brookfield. Brookfield is an infrastructure. Brookfield is very big in data centers. Brookfield understands that you need to have AI. They understand that you need cybersecurity and military spending. So we are going to see a huge change. And I think the faster it happens, the better it's going to be for Canada to be the real stomping ground for exploration and development. So I remain very bullish this way. The other bullish part for Latin America is it's opening up. We're seeing conservative political leaders coming into countries like Bolivia. And the more we have that of getting away from Colombia's Petro and Hugo Chavez's protege, Maduro, that world is, I think, is going away. Malays in Argentina. I know Paraguay is very, very financially a conservative country, and everything they do. So they are growing at a 5% GDP clip with very little debt funding for it. So you can see these things evolving. So we're in a secular big bull market for resources. Very few believe it. And if you're not long, you'll be wrong.
Well, I think that's a perfect place to wrap up. I think we covered a lot of ground here today, and you've given us so much to think about for 2026. So thank you very much for coming on. This is great.
Well, thank you, Charlotte, and happy holidays to you.
Happy holidays as well. Once again, I'm Charlotte McLeod with investingnews.com, and this is Frank Holmes with US Global Investors.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.